Top 5 AI stocks poised to dominate in the next decade. We are initiating our AI-focused portfolio with $60,000 invested in 4 stocks well-positioned for growth fueled by AI. NVIDIA at $25,000. 5% is a leader in data center networking and GPU technology, which positions the company for future EPS growth. AI's high-speed data requirements are expected to benefit Coherent $10,000, 2%, which currently dominates optical communications. Taiwan Semiconductor $15,000. 3% maintains control over 90% of the production of sophisticated AI chips, providing sector leadership and affordability. Synapse $10,000. 2% is a company that is prospering as the demand for semiconductors increases due to the growth of AI. The company provides essential circuit design software. Finally, Credo Technology $5,000. 1% is a small-cap company specializing in high-bandwidth networking and is prepared to expand its AI infrastructure. Additional high-potential AI investments are anticipated. The first stocks we're buying. On September 12th, we disclosed 4 initial acquisitions for the portfolio. Each item will be elaborated upon below. Combined, we are purchasing $60,000 worth of these first 4 securities, which will serve as the foundation of our portfolio as we continue to issue additional buy alerts in the months ahead. 1. NVIDIA NASDAQ NVDA. $25,000 was the initial purchase amount. Portfolio allocation percentage, 5%. Investors should not be surprised by the inclusion of NVIDIA, as they have emerged as the embodiment of artificial intelligence's expansion. Nevertheless, we remain convinced that Wall Street is underestimating the company's potential in the upcoming year. We anticipate that NVIDIA's forthcoming Blackwell cycle could generate EPS of $4.50 or higher in 2025, resulting in profits per share exceeding $5. This implies that, in contrast to allegations that NVIDIA is in a historical valuation bubble, the company maintains an unwavering hold on the most significant technology trend of our era while trading at approximately the same earnings multiple as the broader market. Furthermore, we think that the strategic initiatives implemented by NVIDIA over the past 15 years have established a competitive moat that is more robust than the majority of market observers recognize. The company's dominance is not only a result of its development of HUEA, a platform for GPU development, but also of its expansion into networking technology, which will be indispensable as data centers expand from connecting thousands of GPUs to 1 million or more in the next decade. 2. Coherent. $10,000 was the initial purchase amount. 2% of the portfolio is allocated to this asset. Coherent is the foremost supplier of optical communications components. We predict that the subsequent flood of artificial intelligence expenditures will result in a substantial expansion of that market. The inflection point in spending in Coherent's primary market is being created by the creation of ChatGPT and the subsequent boom in data centers being rebuilt around GPUs. As is evident, compare the prior trend in an orange line with the new projected trend line in blue. There has been a history of uneven transitions to transceiver modules with increased bandwidth. It has taken longer than anticipated to transition to 400G transceivers. Despite the abundance of headlines regarding the increasing demand for data, telecommunications companies have not made sufficient investments in this sector in recent years. Nevertheless, this dynamic is being altered by the advancement of AI. Optics in data centers are more power efficient and facilitate faster connectivity. Their most significant disadvantage has been their cost. However, the demand for more intricate and costly optical components from Coherent is expected to increase as the construction of large GPU clusters becomes increasingly competitive. In addition to the AI growth, Coherent has a number of catalysts that are worth monitoring. The company benefits from the decrease in interest rates, which has resulted in a manageable debt burden of $4.3 billion. Additionally, James Anderson, the CEO of the organization, is initiating an ambitious initiative to optimize its operations. Coherent is an exceptional method for gaining exposure to the upcoming surge of data center spending when all the factors are considered. 3. Taiwan Semiconductor. $15,000 was the initial purchase amount. Portfolio allocation, 3%. In the field of sophisticated semiconductors, Taiwan Semiconductor is the foremost manufacturer. Several decades ago, over a dozen companies were involved in the production of sophisticated semiconductors. Nevertheless, competitors withdrew from the competition to produce the most advanced chips in the world as each iteration of chips became more intricate and costly to produce. Currently, the race to manufacture the most sophisticated chips in the world is contested by only 3 companies: Intel, NASDAQ, NT, Samsung, and TSM. Taiwan Semiconductor (TSM) has a dominant 90% market share in advanced processors used in industries such as artificial intelligence, as both Intel and Samsung have struggled to keep up with TSM in the leading nodes and industry term for the most advanced chips. Taiwan Semiconductor is reasonably priced despite its dominant position. The stock was trading at 17x forward earnings when we declared our intention to purchase shares of Taiwan Semiconductor in our ad portfolio on September 12th. That is a substantial decrease from the S&P 500 market average of 22x. Furthermore, the organization anticipates the implementation of numerous catalysts in the forthcoming year. TSM's largest customer is Apple, which is anticipated to experience a supercycle with the introduction of its new iPhone 16. Even though AI sales are increasing, the company remains the largest customer of TSM. Finally, Taiwan Semiconductor has achieved a leadership position in critical technologies such as advanced packaging utilized in AI processors CoWoS. Taiwan Semiconductor gains the capacity to increase prices to its consumers as a result of this lead. It is anticipated that the company will increase the prices of its most popular snacks by 5 to 20% in the upcoming year. In conclusion, we are confident in our decision to establish Taiwan Semiconductor at a 3% position in our AI portfolio and anticipate the possibility of further stock additions in the years ahead. 4. Synopsis. $10,000 was the initial purchase amount. 2% of the portfolio is allocated to this asset. This year, it is anticipated that the semiconductor industry will generate revenues exceeding $600 billion. The software that enables companies to generate all of these circuits is referred to as electronic design automation. Cadence, Nasdaq, CDNS, and Synopsys are the foremost EDA companies. It has been profitable for both companies to dominate the software that semiconductor companies use. Synopsys has experienced a 257% increase in the past 5 years and a 6,360% increase since its initial public offering in 1992. Cadence has experienced a 305% increase in the past 5 years and an approximate 4,000% increase since 2010. We are also certain that these accomplishments are not yet complete. Over the past 5 years, Synopsys has experienced a 25% compounded annual growth rate in operating earnings. Over the next 5 years, the semiconductor market is expected to experience a substantial increase in size due to advancements in artificial intelligence. Additionally, the software that Synopsys provides to its clients will become even more valuable. Synopsys is not inexpensive, however, it is currently trading at approximately 34 times forward earnings. This company boasts an exceptional competitive position and is expected to experience exceptional growth in the years ahead, provided that artificial intelligence experiences a significant surge. It is an exceptional organization to acquire during periods of decline in its stock price. We will initiate our position at 2% of the portfolio and may continue to increase it in the years ahead. The next portfolio buy, Credo Technology. As previously mentioned, we are not merely purchasing 4 securities and then discontinuing our investment. We are consistently reviewing artificial intelligence news to identify the companies that are most well-positioned to capitalize on the latest advancements in the field. We will continue to incorporate equities into the portfolio as time progresses. In the most recent episode of the AI Investor Podcast, we disclosed that the subsequent acquisition in our portfolio will be a small company named Credo Technology Nasdaq CRDO. We are certain that the subsequent phase of AI expansion will entail substantial investments in the development of new data centers and the enhancement of their networking capabilities. Credo's products are at the forefront of the transition to 800 grams and 1.6 TB networks. See our write-up on Coherent above for additional information on this transition. This transition has the potential to significantly accelerate revenue growth in the second half of 2025 and into 2026, which is still being undervalued by Wall Street. Credo is being initiated at a 1% position, which translates to a $5,000 purchase as a result of its diminutive size. The corporation is a small cap, with a market capitalization of approximately $5 billion. We will continue to include additional companies that are at the vanguard of this trend in the months ahead, in addition to Credo. Conclusion. Our initial $60,000 investment in these 4 AI-focused equities establishes a robust foundation for long-term growth. As we broaden our portfolio with high-potential opportunities, each company provides distinctive advantages in AI-driven markets, thereby ensuring our ongoing success. Enjoyed this content? Don't forget to like, subscribe, and comment to stay updated and share your thoughts.